So the market is going to start rising now, and I'll tell you why. The first reason is that we have reached our daily objective to the downside. Where was that? Well, it's right here. This one here this one here, because if you look at it, where does retail have their stops initially? It's right there, that double bottom, and it's from this trend line here-ish. Right there, they put their stops right there. So that's like the first major case where there were stops. So that is where we have anticipated the first move to come. And something that strengthens that thesis is that we have started a market maker sell model right up here, which tells us very likely that we are moving up right there again. And I'll tell you why in just a second. So let's drop down into the lower time frame here. Market open is 3 minutes as well. So we have, notice how on this trade here, we end we begin the move with a double top. Now that means that we have a whole lot of stops still to be claimed up here from retail. They went short of this trend line, and went short of this double bottom. So that's the start of the market maker model. And I anticipate that we are now going to move up right here because, well, smart money sold off their positions right down here as we went below here. And now we are anticipating a move up here before the continuation move will come, which is heading down here and most likely even deeper as well. I anticipate a move probably at least down here, down there, because that's the last place where we have retail stops on the daily here. That's very clear. But from there, we gotta see, what kind of move do we get then? Do we get like something that looks like a market maker sell model with a lot of accumulation? Maybe do we leave double bottom here, come up a bit like this, like that will tell us, okay, we're probably gonna continue lower. But I'll discuss about that later. First off, I'm going to give you some practical examples of how you can use the approach of knowing where retail stops are. So this week, I made quite a lot of money. I'm going to be honest. It's, for me anyway, because, this week I made quite a lot of money. And where we did that was knowing this bias here. So I'll start you off here on the daily. We knew that we were going to fall because where have we been building up liquidity? Right here. And I called this, look at my other video, my first video. It's titled Brace Yourself, Smart Money is About to Crush You. Look at that video and look at how I anticipated that we are going to get the start of this fall here. And why? Well, I'll tell you again. We build up liquidity here. Retail has their stops here. They go short here, put their stops up there. And they do the same. Right there, where they put their stops right above here. Sorry, it's a bit slow. I've been traveling some, so I've got my laptop. Stops right there. So all the stops were up there, but who in retail had their stops up here? Ask yourself that. Nobody on the daily, right? There is nobody who had their stops there. So there was no reason for us to go below there. And then we also get this inducement move here, which is the fake move. So we get this fake move here on the weekly. So now all of retail are also longing and their stops are right down there. So yeah, at the very, very, very least, we are going to go down here to take out those stops. But I anticipate a move further down. But we got to see, obviously, what kind of move we get from here. But I anticipate further down. Now, I'll show you the trade examples that you could have taken this week, that if you learn this method, you are going to make so much money so you'll never have to work again. Okay, and I'll tell you what my thinking was behind my trades and why I did the trades and, well, the logic behind them. And I'll show you the examples. So, first off, right here at 9:30, I caught this fall, this drop off right here. It was right there, I believe I went short. So I'll begin on the higher time frame, and then I'll drop off to the 1 minute. I exit like down there or something. Stop was above this high there. Okay, so we come up here. First off, we have got this trend line here, right? We building up liquidity here for very, very many days here. And the main trend line that I wanted to show y'all was this one. Let me go on 4 hours, sorry. So it was this one, this trend line right here. So we got that one. And remember, we're anticipating a move lower on the daily. But here, on the 4 hour, we get this one. So retail goes short here. They put their stops right above there. So now on the 4 hour, we have already taken out all the liquidity on the upside that we need. And we do not need us to sweep this daily high here, since nobody in retail has their liquidity there. So there's no reason for the banks to take price up there, since they won't be able to like short, you know. So right here, the banks got in. And I went in with a long-term low here as well, which I sold off this morning. Right there. Solid. But yeah, that's not the short-term trade that you want to learn about, I think. So the trade that I took on the short term, well, yeah, sorry. So why I took this trade here. So now on the 4 hour, we've swept all the liquidity we need. So now we anticipate the move to come. Why? I'll tell you one more time very clearly. We've already swept all the liquidity on the upside that we need to sweep. So if the move's going to come, it's going to come now. We've already tricked retail out of it. The banks have filled up their positions right up here. We don't need, okay? We don't need to go up again. Drop down to the God, I'm less. We drop down to the hourly. Right. Sorry. Right here, we build up a ton of liquidity. Right there. All right. And we also leave this. We have these, you know, and these are like equalos. They're not like, they are equalos here. So we have a bunch of liquidity for smart money to sweep below. And I'm gonna drop down to the 15 minute. Now it starts to get spicy. So if you've stuck around for this long, I mean, you're about to be rewarded. I'm gonna tell you my strategy. So basically, how do we know this right here is a market maker sell model? Well, what you wanna look for is right down here. I mean, how does the move start? First off, does the move start off consolidating and like building up liquidity, leaving liquidity? Because we do right here. So, and I mean, if we combine that with our higher time frame narrative, it strengthens our thesis that we are going to go down. Because if this was a long-term low, would we really like set a low with a double bottom? Probably not. Then what? Then we look, where does retail have their stops? Well, initially I thought we were gonna go up here, but we didn't. Instead, we stopped right here below, and then we started building up all these lows. But sorry, why did I think up here? Well, because we got this double bottom here, right there, and yeah, I mean this trend line here would be stops right up there after we broke through it. So many in retail would have stops around here. Yeah, but we didn't get that. Instead, we get a bunch of liquidity right here, right? So we start building up double top, double top, double top, double top, double top, right? So now ask yourself, would all of these double tops be enough liquidity for smart money to now enter a bit earlier instead? Yeah, in this case, it was. And that's a narrative. You gotta understand when, like, basically how much liquidity is enough for smart money to enter. That's the hard part, and that's the part that takes time to learn. But I'm gonna try to simplify it as much as I can here. Well, yeah. So, but we get this sweep here, up here, from all the liquidity that we had right, right here, where everyone, I'm just gonna do on one here, but people went short here and put their stops right here, right? That's logical, right? It's a double top. They see. And I then treated this one here as an order block. So I put my stop above that one. Why? Because now we had liquidity here. So now it would be valid as an order block. But before this up move here would not be valid as an order block because there's too little liquidity. But now if we were to only sweep this higher, this high should not be broken. So that's why I put my stop above here. And I'll go through that again on the lower time frame. So now basically, look at this high here. It was swept, right? So everyone who went short here, they had their stops taken right there. And what that tells you is that smart money went short across this entire move right here. And well, still some people had their stops right there, and that's why I was looking at that one there as well. As you could see, it was taken here, and then we fell. But yeah, this entire move anyway was an order block because it's a part where the banks sell, right? And they don't really have time to fill up their positions. So now we get the consolidation here below. Okay, so we can see, okay, most likely we're not going to bottom here. We have our higher time frame narrative of being bearish, okay? And then we start to get the juicy parts. We start to get these trend line fake outs to the downside, right? Retail going short, retail being stopped out, retail going short here on the double tops right there, right there, right there, right there. All of their stops right above there. Correct? Yes. So now we have so much liquidity here. So now it's valid for us to anticipate that we don't have to go above this double top here because we have so much liquidity down here already. And we're in a hurry to get to the downside because on the higher time frame, we've just got this sweep right there, which is the 4-hour one I was talking about earlier. Right. So go down, we get the 9:30 open. Now, I'm gonna drop down to the 1-minute chart. But basically, what you need to understand is we have a whole lot of liquidity above here. And the banks, right here, the banks were shorting. Or, well, they were buying up their shorts. So there's no reason for the banks to take price above this high because they have been shorting from here. And they're just filling up their positions here. So I'm gonna drop to the 1-minute. Okay, so here's the 9:30 move. We anticipated the move to begin immediately at 9:30. Why? Because we've already swept the liquidity that we have to sweep right up here. And well, at 9:30 the move we expect speed. So, and we don't anticipate a fake out move up because this is our order block top and we don't allow price to go above there. So we anticipate the move at 9:30. Price comes, well, here's 9:30 open right there. Notice how the initial move, the first little wick there, is bearish. You see that? The move from open down there is bearish, right? What does retail do then? They go short again. Now they put their stops right above there. Banks go up, take out their stops one more time. What happens? What do we anticipate this move to become? An order block. Because this is a place where the banks are buying up their short positions, right? This entire move up there. So then after we get that initial sweep, we get the speed we were looking for. Now we anticipate the move to begin. So after we sweep the order block low here, we anticipate, well, then we can move our stop. So I entered right above the 9:30 high there. I wasn't sure we were going to go above the entire move, but it was more likely, but I didn't want to miss the move. So bought 9:30 high, stop above the order block, the old order block that I was discussing earlier, and stop was, or target was way down here. And then we get displacement below. Now this speed here is a sign that move is set to begin, right? Because this is a sign that the banks have bought up their positions, basically. This speed doesn't just come natural, okay? So then what happens? Then we get the move back up into the order block. Now this was a bit of a shaky time, because, well, of course, it's quite you're quite a lot in profit already down there. Move comes up, but well, there's no reason for price to go above our stop, our new stop, which is above this order block here. There's just no reason. Nobody in retail has their stops up there, so why would the move go up there? Right? It doesn't. So we sit quite safe, and you can see after this order block is filled up. Look at the speed. Then there's nothing to wait for, right? They have nothing to wait for. So then the move begins simply. And I sold my position right below here. So, or well, I did not my entire, but most of it, 80% to be precise. So that was a solid risk reward of like 7 or something. And then I had my 2 runners that, well, I sold them, one of them down here, and one got stopped at the close. Yeah. But so that was the first train. Now, second train, and I missed this one. I'm so bugged off about it because I literally bought at the daily high candle, but then I remembered ICT saying, "Oh, the move should begin at the 50 or 10 macro, so between the times of 8:50 and 9:10, or any other hourly interchange." But the move here began at 45, and I'll show you. Move, which is right here. So I went short right there at this candle high, right there. So it would have been the best trade of my life if I held on to it, because this was the day where you could anticipate a even bigger move to begin, and I'll show you why. So when we got this sweep here, this first sweep on the 4-hour chart here, well, then we got all of retail to go short. They all went short right there. They all also have their stops right there. And now if we drop to the 15-minute chart, some of them have also managed to buy some positions like up here as well. So now we have right here, we have a double top and a double top. So now we have many stops up here, which I initially thought. So we went ahead and we swept those as well. Now, why was it very unlikely for us to sweep this high here? Well, if you look at it, think about it. Who in retail has their stops here? Who? Well, absolutely nobody does, right? There's nobody. Everyone has their stops right up there. Honestly, I can't see anyone who will have their stops there. There's no double top. There's barely any trend line, and the ones that went off this trend line here, arguably, they probably moved their stops right there. But pretty much nobody has their stop right there. So that's the order block we are going to refer to. Still an order block, yes, because this move up here was a time when the banks bought their short positions. So now we anticipate this high to be swept because we have so much. We have double top, double top, double top, double top, right? A lot of liquidity right up here at this specific line. Now I'll make it red, and this white one is the top of the order block. So we anticipate this move up here. And now what do we get? Right before that, we get a bunch of accumulation, right? Power of three. Accumulation, manipulation, distribution. But you have to know the narrative and the higher time frame bias in order for power of three to work. But here we have the liquidity that we anticipate to sweep, which is this one, because once again, this is where everyone in retail had their stops. The ones who went short there, put their stop there. The ones who went short there, have their stops there. The same goes for people who shorted there and there. So we go ahead and we sweep that, and then we don't have to go above this white line here. And well, oh god, this was so annoying because I anticipate the big trend day here because now there's literally no more liquidity left to grab. So, but yeah, I missed it, which sucks. But I learned that, well, moves can begin at 8:45. Don't have to begin at 9 or at between 50 and 10 as ICT. You know, every single day I find new things that ICT has taught me that I can disprove. I mean, all respect to the guy, but he is not quite the master that I believe he has painted himself as, because there are very many flaws in his method. So the best advice I have for you is just to study on your own, honestly. Don't look into too much of his videos because, well, he's talking a bit too much and showing a little bit too little, I think. Well, basically. Anyways, so here we get the manipulation, the last sweep right there, and that's why I entered on this candlestick here, right there. But yeah, I closed it right there because I thought, oh, the move has to be in at 8:50 or between 8:50 and 9:10. So yeah, I'm a fraud, but now I know that. Until next time, and that's how you learn. You do the mistakes and you know, take notes and you learn from it. Anyways, we can study the price action. So we go down here and we get this trendline sweep there, right? So now our lovely folks in retail go in short, long, right there. So now retail is out of the game, right? Retail also said right here, they went short, right? As we went below that one. But we were in too much of a rush to go above this one. And that's also something I've noticed during these trend days. Like, when you're in a rush, you really can't anticipate all the liquidity to be swept. You generally just want to anticipate the bare minimum. And I'll show you a good example of that now. So first off is here. We just sweep the 1 minute high. Then we can also look at here. We're in such a hurry down, so we just go ahead and we only sweep this one here. even though we had a bunch of liquidity across this whole one here. So that's a note for you. When we are in a rush on a trend day, we anticipate the bare minimum liquidity sweep. Another example, I guess this is where we swept. All right, so sorry, one more thing about this one. How do look at this? Look at what does this tell us? This low here that we get after this super fast move down, and we get that low, right? How much liquidity is not built up there? Like we're not gonna close like that. So I love that because that told me, okay, we're continuing to go short. So I filled up my long-term short position here as well. So yeah, that was how I still knew the bias was bearish. So yeah, and then we just swept this day here and had the move push for the lows that we were looking for on the daily that I showed you in the beginning of the video. And then we get now here yesterday we anticipated, of course, a continuation, but well, I missed the initial move because right here I had anticipated that we would sweep this high one more time here, but we didn't. I did not expect I would have my stop loss right there, this one there, because that's the order block, right? Nobody in retail has their stops above there. But well, yeah, we didn't. And why did or well, basically what I thought was that during the 9:30 open here, I thought we would go above, sweep those, and then we would displace down. But now, why would we not do that here? Well, the logic is that now we have something left to displace them. So now after we have swept these lows here, now we have a place that we can go back to sweep in the future, which is this double top here, right? So that's gonna be the place for the next market maker sell model, and you can look how well it's preparing a lot, basically leaving a lot of equal highs here, prepping the stage basically. Look at these as well, not really the cleanest stops. So that tells me this is a market maker buy model. This is the left side of the curve, and this is going to be the right side, and then we're going to continue lower, I believe. So this move up here is going to be a market maker buy model, right side, and the left side of a market maker sell model, if that makes sense. So on the buy side, we are going up to sweep this, but it's also preparing for a future move lower. Now, the move that I did catch yesterday, which made me $2,000, was yeah, this is money. So yeah, this one right here. Now, I knew that we still had to go below to sweep these lows here. Right, so this is the daily low that I was talking about. So we had that low and we left with equal lows. That tells me, okay, bias is still to go lower. This is just a market maker sell model. So the setup that we were given is this one right here. So first off, where do we retrace to? This order block here. Why is this an order block? Well, because this entire move up from here was just the smart money buying, right? They were buying up their short positions even more. So the move comes back to the short, or well, the order block, sorry. So from here we anticipate a fall, and then I looked for some sort of inducement, which we have get right there as we sweep this trend line. So now retail are here going long, basically right here. So now retail's out of the game. They're missing this move, and we've also built up a lot of liquidity here for the banks to be able to buy their positions. So we have enough liquidity for us to fall, basically. So here we get the accumulation, manipulation, boom, entry right there, stops right there, and I then sold off one contract there and the others right there, and I traded with 5 micro contracts. So yeah, it was quite a profitable trade, to be honest. Closed right at 15.55, so just before close, pretty much we got the sweep we were looking for. But yeah, that was the move. I'll drop down into well, let's take a look at some of the retracements we get as well, because we can learn about order blocks from that as well. So right there, look at this sweep below there that we get on that wick right there. You see that one? Now, what happens then? Retail goes short. You put their stops above there. So retail goes short right there, stops above there. We go up and we sweep that. And then look at how this is treated as an order block. Right there. Now we displace away from it. Look at it, how it's treated as an order block. And yeah, so here we're just filling up our positions, filling up the positions ahead of a inevitable fast move that will come. But yeah, look at that. That's so beautiful. Fake sweep, break down below, take out the stops that retail has. Right there. So that the banks can buy the real short. How beautiful. Let's see if we have more on the 1 minute here. See, maybe? Oh no, this is now. I guess. Yeah, that's. Sorry. Sorry for wasting your time. By the way, if you have any like specific topics you want me to discuss about, please comment them and I'll try to educate, because I think that's the best way for me to know what to make, what what kinds of videos you want to watch, Right. So let's see. So we have this one here. Look how we basically we just build up liquidity here in the order block, as you can see. So this white one here is the order block I was discussing. Sweep below trend line, take out the stops that are above there. Whole move becomes order block because that's where the banks are selling. Move here, building up liquidity. It's just allowing the banks to buy up the positions that they have left in the order block. Same here. Build up liquidity, liquidity, liquidity. Buy up the positions that they have left in the order block. Then the move comes, right here one would say, oh, but what about this one? Well, yeah, in theory, you are right. We should have gotten a sweep above here. But we were in such a hurry, we had to sweep this daily low ahead of 16 o'clock. So when we are in a hurry, we can anticipate that we at times won't be able to get the secondary sweep. So that's when you already have to be positioned and just trust the bias, you know. But what next? Well, I think, I believe what I'm looking for here is that we get some sort of higher time frame inducement before the big move up comes. So I'm looking for like a bullish trend line hourly, and we go here, touch the trend line 2 times. Third time we go below, we sweep the second low, leave the double bottom there, and then we go up, and final target would be this high right here. But yeah, I hope you learned a bit about my approach and my thinking about order blocks. And I'll do some live executions as well, and also some lectures about my strategy. And yeah, please ask any questions that you have, and also make sure to check out my last video, the first one I did, Brace Yourself, Smart Money is about to explode, or something like that, it's title, where I basically discuss why the markets were gonna fall. So the reason behind, before the fall happened, why it was likely to happen. So thanks for that. Have a good day, and I'll see you around. Peace.